Hello, it's Robert Miner with Dynamic Traders Group with today's DT trade strategies for the week beginning August 10th, 2020, where each week we look at very briefly a couple markets that might have potential trade setups coming in the week that I alert you to. And as usual, these are very brief videos, much more brief than what we record and prepare for our DT Report subscribers. So if you like what you learn here, check out our DT Reports where we have a 1-month trial available for just $19. I'm going to look at a couple of markets this week I typically don't look at that are possibly in some unique positions for trades. And those two markets are Bitcoin and the VXX, the ETF short-term volatility index. So let's get started with the VXX. The VXX is an index that represents a short-term volatility, or rather it's an ETF that represents short-term volatility. And where you see these spikes is just weekly data since last January, is of course where the stock indexes, the S&P, had fast declines. Of course, this is the February-March decline, huge spike up in the VXX, spike up in volatility, and then we've more or less been on a net, well, not more or less, but we've been a net bear trend since then with a couple pops up along the way. So one of the reasons you might be interested in looking at the VXX if you do trade the stock indexes is when the VXX is in a position, even for a short-term low, usually the stock indexes are in a position for at least a short-term high. So I've traded the VXX off and on, usually with pretty good success. The one thing you have to realize, it's quite leveraged. It has large percentage moves, and those moves usually don't last too long because that kind of volatility doesn't last too long. Even if you have a kind of a bear trend that's kind of not volatile, it's kind of slow moving or whatever, the VXX doesn't move much. But if there's a pop, it can have a big percentage change. As we'll see in a minute. So let's look at this weekly data. Weekly data is this is the 100% alternate price projection of this last decline, and it's the 127% external retracement of this last advance. Right in here, I'm not showing it though, because it overlaps and you can't read it, but it's the 78.6% retracement, which is another area that you want to be aware of. So we're in some price relationships, and then what's reasonably important is we've been a couple weeks dual look back oversold. Now, like any other market, if it's in a consistent trend, it can be oversold for many weeks, but at least we're in that area from where weekly lows have been made in the past. And a lot of these weekly lows only last a couple of weeks, as we'll take a look at the daily data in a minute, but we'll also see why you might want to be looking at this right now. And the other thing that's significant about right now is since the January low is 9 weeks later we had a low, 10 weeks later a low, and then we had about a 2-week pop. Back here was only about a 1-week pop. In a minute you'll see there's a big percentage change though. And this past week was week 9, so more than likely by next week we'll complete a weekly low and have a 1 or 2 week pop, if not more. But I never anticipate any significant pop in the VXX. But if it's a week or two and you can catch most of that, you're going to see in a minute why that can be valuable. So even if you didn't want to trade the VXX, this would be at least a little bit of a warning that because it's in a position to make a weekly low, that the stock indexes might be in a position to make a weekly high. So here's the daily. And again, if we go back since the June high, and for the 12 days, we've made what we call a daily low. That's a low that lasts a few days. And Thursday was right in that cycle. And Friday did make a slightly lower low, but what this tells us is we're in a time for at least a daily low to have a pop that lasts a few days. And of course, we can even look at the kind of shorter term reversals have happened every 5 to 7 days. So basically about half of that cycle. And again, Friday was day number 7. So we're right in that time span of when lows are made. And of course, the daily momentums have reached dual look back oversold. So this itself is in a position on a reversal to consider a long trade. However, keep in mind that typically they only last a few days. Here's the reason you might want to consider it for a trade. And I'm just going to put these highs in. I've added the percentage change of these advances, and you can see even these 2 to 3 day, 4 or 5 day pops, some of them 15, 14, 15%, 13, 14%, 11, 10%, etc. So even those have pretty significant percentage changes. What you want to keep aware of, if you're not able to enter right near the lows, just keep aware of your position size and capital exposure. Is that percentage-wise? For instance, here if we were looking at maybe if we make a bull reversal in our daily momentum and a higher close or reversal day close early next week, that would be a setup. We know that now that'd be a setup for a long trade. We also want to keep in mind that that sometimes these are just 2 to 3 or 4 days. These pops up after the daily lows. Sometimes they're 10 to 15%, but we might have several percent capital exposure from where we have to put our stops. So you just do smaller position size, so your capital at risk is fairly small. So something you might consider. And also, just keep in mind that when we make these lows in the VXX, that it's usually a high in the stock indexes. Again, we're just looking for a comparable low to these other lows, 3 to 5 days or so, 10 to 15% or so. But that's a pretty good percentage change in a short amount of time. And it would indicate that more than likely the stock indexes, particularly S&P, is near what we call a daily high that will last a few days. Now, because the weekly momentums in the VXX have been oversold for a couple of weeks, maybe we'll get a little bit more pop than those 10, 15%. Again, another reason to be on top of it and considering it for a trade. So that's the VXX. Let's take a look at Bitcoin. So here's Bitcoin weekly. And typically, I haven't for well over a year included any regular analysis or trade strategies or recommendations for Bitcoin in our DT reports. 3 or 4 weeks ago, I started including it now and then because we had a few subscribers ask for it in our weekly videos. And particularly because a couple, 3 weeks ago, we were at a potential turning point. So I included it about 4 weeks ago. And this is the weekly chart. And the reason I included it was as of mid-July, right where my cursor is we had completed this 5-wave advance into the June high and then just been sideways. It wasn't even any typical correction. But 2 things happened, 2 technical positions the Bitcoin was in that indicated they were near the end of a correction or were probably near the end of the correction. Is number one is they were within the 38 to 62% time retracement of this 5-wave advance, and that's the typical time retracement range for a correction, correction to a 5-wave advance. Time acts a lot like price, and there's time retracements and alternate time projections, just like we have price. It's different for different wave structures, of course, just like it's different for price. But after a 5-wave trend or any kind of bull trend, we look at the 38 to 62% time retracements as targets for probable corrections to that 5-wave trend. So anyway, we were right in the middle of that about 3 weeks ago. 4 weeks ago, actually, and we had already made from the oversold zone a weekly momentum dual look-back bull reversal. So when we consider that, is that the reason I included it then about 4 weeks ago, as I said, we're in a position to have completed this correction, and if that's the case, and we resume the bull trend, of course, we should exceed the June high, and Bitcoin is a lot like the VXX in that it has pretty substantial percentage moves. Again, I don't trade it myself, but we put it in now and then for the help of our subscribers. And so here's where we were at, right around in here, mid-July, when we were looking at that weekly momentum bull reversal and this potential corrective pattern of an A, B, C, D, E. So I had in our report that a close above the close of the wave D high, and there's the close only data, just drew a line there. I made it green just because that would be an all go signal, so to speak. Close above that wave D high would indicate that this correction should be complete, and eventually Bitcoin that should continue to rally to above the high. Well, on July 22nd, we closed above it. We had another higher close the next day, sideways, inside day after that, and then bang, here we came real strong to a new high as anticipated the following day. So the reason I'm showing this today in our sort of a brief trade strategies, DT trade strategies for YouTube and Twitter followers, is that I just want you to be aware if you happen to trade Bitcoin, that it's near a fairly significant area to make a top that might last a couple weeks or so. In other words, coming up from the July low, probable 1, 2, 3, 4, and this is a probable 5. And at the end of wave 5s are frequently, very frequently, by the way, in the 127, 162% external retracement of wave 4 in that range. And Thursday's and Friday's high, for practical purposes, they double topped right at the 162% external retracement. The weekly momentum just reached overbought, so I'm not so sure it's going to be a real significant high lasting many weeks, but it should be a high followed by a correction to this advance. And not even doing any retracements, that sort of thing. You can just consider a correction. Usually comes down into the range of wave 4, so that's not a significant decline. But price-wise it is. It's about $1,000, I think. Doesn't look like a lot on this chart, but it's reasonably significant in percentage terms. So I'll let you decide if that's a decline that you'd want to sit through or not, or if you're more short-term traders and you're still long, you might want to bring your stop pretty close to the market because we're probably pretty close to completing this wave 5 high, and we'll be a week or two sideways to down, possibly that much, and down to around the extreme of the wave 4, which happens to be also the top of this more significant higher time frame wave 5, where resistance becomes support. That's real typical. So that's Bitcoin for you and what we're looking at potentially for the days and weeks ahead. That's it for today. If you learned something today and you found something useful, check out our DT reports where we got a trial from $19 for a full month. Take care.